Hello friends, welcome to my video on financial statement interview questions. Are you preparing for a career in finance or accounting? Understanding financial statements is crucial for making informed decisions, analyzing performance, and driving business growth. In this video, I will cover 25 essential interview questions and answers on financial statements, including balance sheets, income statements, and cash flow statements. Whether you are a fresher or a professional, this video will help you prepare for common financial statement questions and boost your confidence in your next interview. If you have not subscribed to my channel, I request you to subscribe to the channel. So let's begin. Let's start with the first question. What are the information you will find while reading a financial statement? This is very commonly asked in the interview. The answer is financial statement includes the following information. Balance sheet, where you will have information about assets and liabilities. Profit and loss account, where you will have information about expenses, losses, income and gains, net profit or net loss. Statement of changes in equity, where you will be giving the movement of the reserves and equity. Cash flow statements, where you will be providing data about your operating cash flow, financing cash flow, investing cash flow, notes to accounts, and accounting policies. Second question, what is EBITDA? Right? So EBITDA is earning before interest, tax, depreciation, and amortization. It provides the information to the management about the earning made from operations without considering non-cash item, interest cost, and direct tax paid. Question number 3. What items are reported under Statement of Changes in Equity, in short, SOC? The statement of changes in equity details how a company's equity changes over a specific period, highlighting factors such as profits, losses, dividends, and other equity related transactions. For example, transfer of amount from the profit and loss account to general reserve is reported under SOC. So all the movements, for example, capital reserve, general reserve, profit and loss account, OCI, everything will be shown in SOCE and the moment will be given from opening to closing. Question number 4. What are the different type of cash flows reported in cash flow statement? So different type of cash flows reported in cash flow statements are cash flow from operational activities, where you report the cash movement of all the operational activities, your core business. Cash flow from financing activities, that means your source of fund. It could be issue of share capital or borrowings from bank. All those cash flow will be recorded under financing activities. And then cash flow from investing activities, where the company is investing. For example, you are investing in fixed assets, the company is investing in subsidiaries. So all those cash flows will be reported under cash flow from investing activities. Question number 5. What is the meaning of non-current assets? So when you prepare the financial statement, the statement starts with non-current assets when you're preparing the balance sheet. Now let's understand what is the meaning of the non-current assets. So non-current assets are the assets which the company is not going to convert those assets into cash in short period of time, that is 12 months. Example, fixed assets. So if the company is having a building or a factory or plant and machinery, the intention is to use this asset and generate revenue in future, not to sell or transfer within short period. Hence, these are reported as non-current assets. Question number 6. What is the meaning of tangible fixed assets and intangible assets? So tangible assets are physical items that hold value for a business and can be touched and used in operations. They are recorded on the company's balance sheet and include items like land, building, machinery, and equipment. So you should be able to touch and visualize the asset. Physical existence is there. Whereas intangible assets are non-physical resources that hold value for a business, like intellectual property, patent, copyrights, trademarks, brand recognition, or goodwill. They lack physical form but can significantly impact a company's worth and operations. Question number 7. What is deferred revenue? Explain with an example. So deferred revenue is a liability that a company records when it receives payment for products or services that have not yet been delivered. So what is happening in this case? The company is issuing the invoice, but the obligation will be completed in future time, right? It is not happening on the day of raising the invoice. So let's take an example here. Extended warranty for 2 years. In this case, amount received from the customer is reported as deferred revenue and the same is distributed across 2 years instead of recording whole amount as revenue as the service has to be delivered over 2 years period, right? Because it is covering 2 years, hence it has to be amortized and revenue will be recognized every month till end of the period. Question number 8. How is advance received from customer is reported in financial statement? Advance received from customer is reported as a liability. This liability will be adjusted when the invoice is raised to the customer. The difference between invoice value and advance will be reported as sundry debtors or accounts receivable. Question number 9. Give few examples of employee benefits which need to be valued by an actuary valuer for reporting in financial statement. So all retail benefits has to be valued by actuary valuer. Management can decide for which period to value. However, for statutory clause, valuation is mandatory. Below are few examples which need to be valued as on reporting date. So what are the examples here? Gratuity expenses, leave encashment, provident fund if the company maintains PF trust, retention bonus, and if the company is giving ESOP also, that will be covered here. Question number 10. What is the meaning of provisions for expenses? So provision for expenses includes the below items. Status as on reporting date. The day we are preparing the financial statements, you have to cover these items as provision for expenses. So let's see what are the examples. Invoices which are issued by vendor but not yet processed by finance team. That means it is pending for processing. So you have to consider for provision. Service received from the vendor but vendor has not issued the invoice. As you have received the service, you have to accrue for it. You have to create a provision for it. Any contract made with customer for any discount, rebate, benefits to be provided for the goods already sold. So if you have a contract, you have to give any extra rebate, extra bonus, extra commission, right? If there is a volume targets, then please provide that because that will be part of your expense provision. Provision created for any unfavorable judgment received from government authorities court. So if there is a legal case and you are getting an unfavorable decision, then you have to create a provision for that. Question number 11. What is prepaid expense? What is the accounting flow for prepaid expenses? How it is different from advance paid to supplier? So prepaid expense are the expense which has been paid to the supplier, but the service from supplier not yet received. In this case, the amount paid to the supplier is reported as prepaid expense, and it will be reported under current assets. And every month it is amortized and reported as expenses. In case of advance to supplier, the supplier doesn't give any invoice to account. It's only cash flow. Okay. Now, what is the meaning of capital work in progress? So capital work in progress, in short, it is called as CWIP, refers to the cost associated with long-term projects like construction or development that are still underway and not yet ready for their intended use. It is essentially represents assets that are under constructions or development, and the expenses incurred are accumulated in this account until the project is completed and the asset is put into service, and there is no depreciation till the asset is put to use, right? So you can say that these are work in progress. That means the work is still going on and the asset need to be tested and then installed and then it will be used in the production. Till then it will be reported as CWIP. And in financial statement also you need to give the aging as per the requirement of the accounting standard. Question number 13. What is ROU asset and how it is reported in financial statement? A right of use, in short it is called as ROU asset, is an intangible asset that represents a leasee's right to use a leased asset during the lease term. ROU assets are a key component of lease accounting and are recognized on the balance sheet alongside a corresponding lease liability. That means if you have taken a building on rent, for example, for 3 years, then all the payments what you're going to do for next 3 years has to be discounted to the current present value, and you have to create a RO asset, and you will have a corresponding lease liability, right? You have one asset and one liability, and every month there will be a depreciation on this RO asset for the 3 years contract. Okay. Question number 14. What is the meaning of deferred tax asset? Explain with an example. A deferred tax asset is an item on balance sheet that results from an overpayment of tax because of difference in accounting and tax laws. This overpayment of tax can be adjusted in subsequent year tax liability. Example, disallowance of expenses under Section 43B of Income Tax Act. It is claimable when it is paid. Example, gratuity expenses. As this expense is disallowed, what will happen in the current year? Your tax liability will go up because as per Income Tax Act, you can't claim it because you have not paid the gratuity expenses. But management knows that next year or in subsequent years, whenever the gratuity expense is paid, you can claim that expenses and reduce the tax liability of that year, that financial year, right? So you have to carry an asset to the extent which you will be getting benefit in future years. That is called as deferred tax asset. Question number 15. What is provision for bad debt? Amount which looks to be irrecoverable from the customer. If after multiple follow-up and dunning process, if the customer fails to pay, then management may consider to take a provision for bad debt. Similarly, if the customer becomes insolvent, then provisions has to be taken for outstanding balance. Question number 16. What is CSR? What percentage of profit to be spent on CSR? CSR stands for Corporate Social Responsibility. The Companies Act of 2013 requires companies to spend at least 2% of their average net profit on CSR activities every financial year. Question number 17. What are different types of inventory reported in financial statement? Right. So what are the different inventories reported? First is raw material, work in progress, that means incomplete finished goods. Third is finished goods, and last is stock in trade. And again, it depends from industry to industry. Okay, certain industry may require different items to be reported, but these are the common four items which are reported for any manufacturing company. Question number 18. Give two examples of non-current liabilities. What is the meaning of non-current liabilities? That means liability which you are going to discharge after longer period, that is 12 months. So one of the example is long-term borrowings and lease liabilities, which is to be paid after 12 months. Question number 19. Give two examples of current assets and current liabilities. So what are current assets? Which you are going to convert into cash within a short period, right? That is within 12 months. So first example is inventory, second is trade receivable. When it comes to current liabilities, it is trade payables, which you are going to pay to a vendor, advance received from customer, okay? Because you have to supply goods to them and it has to be knocked off within a short period. So this is treated under current liabilities. Question number 20. XYZ Limited valued inventory cost at rupees 5 lakhs. However, NRV is rupees 4 lakhs. So what is the meaning of NRV? Net realizable value. That means the customer is only ready to pay 4 lakh rupees, not beyond that. Okay. At what value the inventory has to be valued and to be reported in the financial statement. So inventory has to be valued at cost or NRV, whichever is less. In this case, as the NRV is rupees 4 lakhs, which is lower than the cost, that is rupees 5 lakhs, inventory has to be valued at 4 lakhs. Let's take an example here. If the NRV is 6 lakh rupees, whether I'll value at 6 lakh? No. Whichever is less. In that scenario, the inventory will value at cost, which is rupees 5 lakhs. Question number 21. Give two examples which need to be restated as the closing exchange rate. Okay, that means you have to give two example where you have to restate that balances as per the closing exchange rate, forex rates. The answer is trade receivable from outside country, loan taken from outside country, because these are all taken in foreign currency. Hence, on the day of reporting, you have to take the closing rate and reevaluate. And any difference in that will go to unrealized forex loss or unrealized forex gain. Question number 22. Give two examples of contingent liabilities. One is demand of direct or indirect tax by tax department, and it is challenged by the company. Right? So there is a demand by the department and the company has challenged it. Company has documents to support that the case will be in favor of the company. Okay. So as it is in favor of the company, you are not taking a provision, but yes, it is treated as a contingent liability till the case is with the court. And next example is bank guarantee. So if you are given bank guarantee, then that is a contingent liability, right? Because if you fulfill to perform, then the bank guarantee will be encashed. So it is a contingent liability. Question number 23. Give few examples of transactions which will be reported as related party transactions, right? So you have to give few examples which will be reported in the financial statement if you're dealing with your related party. So here are the examples: purchase, sales, reimbursement, dividend paid, asset transfer, loan taken or loan provided. And today if you see, the law says or the accounting standard says that each and every transaction, okay, whether it is monetary, non-monetary, has to be recorded and to be reported in as related party transaction, so the shareholders gets a clear view about the transaction within the group. Question number 24. In India, by when the financial statement has to be uploaded in the Ministry of Corporate Affairs site, right? So it is 30th September, 6 months from 31st of March. Now coming to the last question, whether statutory auditor fees has to be reported separately in the financial statement. The answer is yes. It has to be reported as a separate item under other expenses. Disclosure has to be given for each different assignments given to the statutory auditor along with the fees details. So one will be your statutory audit fee. Suppose the auditor is doing tax audit or transfer pricing audit or any specific assignment given by the company, then you have to mention that as separately and you have to declare the fees paid to the statutory auditor. So that's it from my side. Hope you like this video. If you have any questions, please put in the comment. I will try to answer those. And if you have not subscribed to my channel, I request you to subscribe and share with your friends, those are preparing for the interviews. Thank you.